Hi there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to catch up with John DeLuce, CEO for Abitibi Metals. Trades on the CSE with the ticker AMQ. How are you doing today, John?
Great. Thanks for having me again.
Hey, yes, thank you very much. It's we're a little late. We're supposed to try to do these things on a quarterly basis, but we're kind of doing a semi-annual. I think we caught up with you during a pretty quiet time in the market, sort of last July. And it's been a bit of a busy time for AMQ. A bunch of those things that you said you were going to do, you've gone and done. We're going to unpack that in a little bit, but maybe before we kind of get too far into it, you wouldn't mind if we could get our 60-second stock pitch out of the way.
Yeah, that'd be great.
First question, it's an easy one. What's the name and stock ticker of your company?
It's Abitibi Metals Corp. We trade on the CSE under AMQ and on the OTC AMQFF.
And what is the mission and vision for Abitibi?
We've optioned what we believe is a world-class polymetallic copper gold deposit in the province of Quebec. We have strong government partners, and we're really aligned in this with our shareholders to realize the liquidity event because we think the conditions are lining up where there's clear demand for these type of assets in tier 1 jurisdictions.
Approximately how many shares are outstanding and what would be the insider ownership?
118 million shares outstanding, and between SETI and my general family fund, we have over 30% ownership of the company.
Hey, that's a pretty good amount. What is the current market cap approximately, and how do you compare to some peers?
Current market cap is 30 million. But we have a cash balance of just over 10, so an EV of 20. And I think there isn't a lot of polymetallic developers out there. You look at Foran in Saskatchewan that has a very large market cap of 1.5 billion and just recently completed a large financing with Agnico Eagle taking 10% of the company. So I think the demand for base metals is there, and we're seeing more gold-focused producers come around into the space.
So you got a little bit of catch up there before your the value of Foran. Are you fully funded for 2025?
Fully funded. We have $5.1 million of exploration planned for this year, and we'll start 2026 with a hard money balance of roughly $3 million.
What are your current? What are some short-term catalysts that we should be watching out for?
Short-term catalysts is we have to report the balance of our phase 2 drill program. So that's still over roughly 12,000 meters of drilling to come. We have geophysics results that are pending. Some new team members that will be joining for 2025. And at the tail end of that next month, we'll be announcing our 2025 detailed exploration plan. And really, I think a clearer growth model of how we build value at B26.
Why should investors pay attention to you right now and consider investing in your shares?
I think we accomplished a lot last year, and there's times in the market where the value of what we're developing and the market cap have a large divergence. I think that we're in that position. I don't think the market has properly valued what we've been able to accomplish. As a result, between myself and my uncle, the chairman, we've bought over 1 million shares in the market, filed on SETI over the last month or so. So we think we lead by example. We think there's excellent value today, and the market, it's been a tougher market to finish the year. But I think in hindsight, this is going to look like an excellent opportunity.
Hey, thanks very much for going through that. Now we can get back to our regularly scheduled programming. Hey, just like to sort of ask, it's been about 6 months, since we kind of last chatted. How's your energy? This is a tough business to be CEO of a junior mining exploration company. How's the last 6 months been for you?
Last 6 months it's always a roller coaster in this business, but it's been very exciting. We were when we last spoke, we were in the early summer. We were in between our phase 1 and phase 2 drill program. We were in the midst of working on our updated resource, which ended up coming out in November. So it was an excellent 2024. I think we're at a similar market cap of where we spoke back in the summer. As I mentioned earlier, I don't think the market has really digested and give us recognition for a lot of our achievements last year. But at the end of the day, we raised capital at the right time last year. We got well ahead of our capital requirements that allows us to wait out these periods of volatility that come up in this business. So we're very excited. We've made some excellent headway within some of the investor pools that I think will really lead to the success of the company in the immediate term. We're very excited to be attending the BMO conference in February and being probably the smallest company attending the conference. But I think it speaks to the disconnect in the market that we see today. And we do have a plan to rectify that because there is it's a rare opportunity that we do have with B26.
Excellent. And maybe for those of my viewers that didn't catch our first interview and are familiar with you, could you explain a little bit about your, who you are, your background, how you got into mining, a little bit about your family office that you kind of mentioned earlier in the video?
Yeah, so I'm coming from a family that's been involved with mining for the last 25 years. We're also better known for the airline business, but are also in the real estate space. So we're not perma gold or commodity bulls, but we do see the opportunity that's there today. Now, it's certainly trailed and taken longer than we would have thought, but these bull markets are very hard to time. We're at almost $2,800 gold, and if you look at the markets, you would barely tell that that's where we're at today. But that's the reality of the market. Like Rick Rule says, a lot of people can't stand these bull markets and get shaken off before you really realize true value in these markets. So we see the opportunity. We've rotated capital out of the real estate sector to support Abitibi amongst a very small portfolio of juniors and producers across the space. But in terms of our mining background, we've been a private prospect generator for 25 years, investing our capital in the space, being directors, strategic investors of companies. That's led to having a royalty portfolio. I'm a chartered accountant by background. I worked with the majors at Ernst & Young over the course of 6 years. I left to found Abitibi Metals because we really saw a lack of prudent manager of capital in the space, but also the opportunity that we saw. We saw the amount of monetary debasement, the need for hard assets, the demand in the marketplace for critical metals like copper, the rotation of some of these gold producers going to being more miners in general, with the focus really being sought after with copper gold deposits. So we've had a history. We lead by example with investment within our companies, and we really are well aligned with our shareholders and making always calculated choices within where we invest our capital, whether it's within B26, but also watching the overall burden on the company, because we do think we'll be well rewarded, but exact timing is always hard to say.
Yeah, for sure. So you guys are kind of, thanks for the background on yourself and your family. And you mentioned something about an airline. What airline would that be?
The most recent airline is Porter Airlines. I'd say within the province of Quebec, we were the founding partners of Air Quebec, which was a First Nations partnered airline. So we have a long history of building successful partnerships in the province of Quebec. And then it all started with my grandfather with a Bush plane in White River, Ontario. And my grandfather flew in World War II. So that's kind of how the airline endeavors started.
Very cool. Well, those are two dicey jobs, obviously very important for the military, for that. That's great. But being a bush pilot, oh boy, that's a great way to cut your teeth and get some great skills. Not a great sort of job in terms of the hours and the working condition, but awesome stuff. Glad to see what you guys have done since then. Thanks for the background there. Maybe we could get into a little bit more on Abitibi. Could you give us kind of a high level sort of overview? You kind of mentioned the province of Quebec and your partnership there. I think that's rather key with the name of the company and what you've got going on. Could you give us a bit of an overview?
Yeah, no, certainly. So Abitibi, we are a Quebec-focused exploration company, and we really chose to build our business in the province of Quebec because, in our perspective, it is the best province within Canada, given the government financial support, whether that's refunds on hard money spent in the province, whether that's the Quebec institutional funds, the large charity flow through deltas that we have, and what has allowed us to keep our dilution down within the company. Also combined with the great First Nations partners that we do have that are very pro mining and offer great trades and consultants that we're able to employ at projects like B26. So through, and also with the Quebec government having an exploration arm, which is SOQUEM, that is financed through Investment Quebec, is why we have led to what has been a company making acquisition for us at B26. And B26 was an asset that was developed by a subsidiary of the Quebec government from discovery through to optioning the project by ourselves at Abitibi in November of 2023. So 2024 was our first year of operations at B26. It's the first year that this asset has ever been in a public company. So I think we're still a new story. We've done a lot in a year, but there's still a lot that we need to do to get our story out there. We've started making really quality inroads to some of these larger institutional funds that have been backers of like stories like Foran that have taken longer term positions, that have been more patient capital, which is very hard capital to find in this business right now. I think that it's going to change when we have the wind in our sails, but for the time being, we are competing for scarce long-term capital. So it's taken us time to get that story out there, but it is a very unique opportunity. We, as we mentioned earlier, we have published an updated resource, which I'm sure we'll get into. But really, this opportunity across Canada or in Quebec is very rare. We have a deposit now of 18.5 million tons above 2% copper equivalent. This is a high-grade opportunity over a strike length continuous of 1 kilometer down to 900 meters at depth. So this is a large-scale deposit. We think that we could be scratching the surface of this. So that's why we're very excited. And as I mentioned earlier, there's periods of time where the market misses things, and we do think that we're in a period of that, and we have a plan to really turn things around and get better value out of what we've been able to accomplish.
Excellent. And last time you were on, I think you'd completed your phase 1 drilling, and we're moving into phase 2, if I'm not mistaken. You acquired the project in November. You kind of got you had to do some like preliminary kind of work and figure out where to drill. You completed that, I believe, quite successfully, and then you're rather excited about some phase 2, as well as being able to go and take the historic resource that you guys had and obviously put your own stamp on it and upgrade that sort of resource through modern 43-101. Maybe you could walk us through, what happened since our last chat in July, and in terms of the resource and in terms of your drilling type work, and were you happy with the way sort of phase 2 drilling has sort of some of the results that you've put out, and then what do you think in terms of the resource, updated resource, the MRE?
Yeah, so I think when we spoke in the summer, we were going through modeling. We were modeling the phase 1 drill program to reset for phase 2. That phase 1 drill program was the only program included in the updated resource. There was none of phase 2 that was included. So in terms of the updated MRE, we're very happy with the results of it. I think when we spoke, we were still addressing whether or not we could step forward with an open pit underground, or if we stuck with underground only. And where the resource ended up coming out is we stuck with the high grade underground as of today. Now, that's not because we don't believe there is the open pit potential very similar to the neighboring Selba mine, but it's because we couldn't get the strip ratio down to where we think is reflective of a potential open pit there. And that's not the result of it being the reality of it. I think we believe it's a result of not having enough data. There's additional assaying that we need to do on the historical core, which we have completed some. We'll bring that out to the market, but we also need to do additional drilling to the north to drill off the disseminated zone that is currently considered waste in the pit models that we had run. So I think the open pit thesis is something we're going to continue to develop in 2025 that we think could be meaningful tonnage and lower grade, but a quicker payback potentially in economics. Again, very similar to Selba. But in today's market, the market is focused around grade, and that's where we made the decision to focus on what is a clear underground model. We were able to publish an average grade across both categories at 2.18% copper equivalent. So that we're very happy with the resource. We've been able to increase the tonnage by 62% in a year. We've been able to increase the contained metal for copper by 39%, 29% for gold. So that's a lot to be able to accomplish in a year. In terms of the phase 2 drill program, we really broke out our objectives between the near surface targets, the mid-level, and the western plunge. We've reported results from the western plunge where we've extended 200 meters at depth, up to 200 meters at depth. The highlights of that was 4.9% copper equivalent over 4 meters, with then about 2.4 over 17.5. Now that was hit within a lower grade 0.8 over roughly 78 meters. Now that's under cutoff as of today, but the fact that we're hitting that wide zone at depth is significant. And like the first 300 meters vertical, we could be right next to what is a much higher grade 40 to 50 meter interval. The mid-level, we've published some initial results, but I think I'd say in reflection, one of the things that the market has been frustrated with is the timeliness of reporting results out of phase 2. That's been a combination of some operational delays combined with some assay turnarounds at the end of the year. So that's something, this is a punishing market. The market wants to see results and timeline delivered on a timely basis, or else the market thinks that you're not delivering timely because you're sitting on bad results, which is not the case. So we will have a release out this week. We will be fully caught up in February, and we're making changes within the team, some key new additions within the VP level Abitibi team that we're going to be able to get ahead and not have some of the issues that we did through the tail end of last year.
Excellent. In terms of, how many millions of tons, if you could combine categories, which I know you're not really supposed to, but if I'm going to ask you to do that, what sort of tonnage are you looking at on your updated MRE?
Yeah, so the combined tonnage is about 18.5 million tons at an average grade of 2.18% copper equivalent. So it's a significant increase. The majority of that tonnage is about 15 million tons that is held within the copper gold strainer zone. And then the balance is within the parallel, more so typical mass of sulfide, zinc, silver. But again, you look at the opportunities. Yeah,
sure. How many meters of drilling's been done since you've updated the resource? Like how much drilling has additional drilling's been done that would not be, hasn't been reviewed and hasn't been part of any sort of MRE?
So that's the 16,000, roughly 400 meters that was drilled as part of phase 2. So we have quite a few more results to release from that program ahead of our restart for phase 3.
Excellent. And then you mentioned the Selba mine, which is a regional deposit. How just for comparative sake, is there anything to compare? Is it similar at all? And if so, what's their tonnage?
So they went into production at roughly 20 million tons. And once in production, they scaled to a resource of just under 60 million. And they produced 53 million tons over 20 years. So it was a very similar model where you had the copper gold and then the zinc silver similar grades as B26, and the Selba mine was the reason why BHP or Billiton, in partnership with the Quebec government, made the discovery of B26 in 1997, as they were trying to drill all the EM anomalies along the contact to make a discovery to keep the Selba mine in production. And I believe that if they had the size and scale of B26 as of today, this would have been ramped into to continue production. So it is a similar model. It's one of the tasks that I'm giving my technical team, is we need to be able to draw a better comparison to Selba to show the similarities in more detail and the growth profile that was achieved at Selba that led to such a large and profitable mine.
Ultimately, how many millions of tons do you think you'd need before A, there could be a production decision, or B, somebody might want to acquire you to sort of fill out their sort of pipeline of new project development?
I think you look at Selba, where it went into production, which isn't that far off of where we are today. So I think that 20 to 30 million ton range, while maintaining a grade of 2%, is really a key milestone for the company. And I think there's not a lot of opportunities within that range. Like we look at Foran, they're 42 million tons at 2%, and they've been well financed and they're in construction. So we're about 42% of the resource size of Foran as of today. So we do see this as a 30 to 50 million ton target, very similar to Selba. But again, this is something that we need to bring out a better growth plan to the market. And I think that's where we're going to get better value in not just arm waving the comparison, but really showing apples to apples how we get there. And that's something that I think everybody will be able to see as part of our 2025 plans.
In terms of Selba, sorry, I think you might have mentioned it. Just wanted to confirm. Did they have a combination sort of open pit underground plan, or are they simply an underground?
So they were an open pit combined with an underground operation. So very similar to where we see the potential at B26 as we build out the low-grade halo around the current underground resource.
And so all of that lower grade open pit potential mineralization, you talked about, and you didn't have enough data, and there was some gaps and you couldn't get the right stripping ratio. Assuming you could sort of fill that in and it does look successful, you'd be able to pull in a lot more tonnage because you'd be looking at a much lower grade for an open pit, to make it economic as compared to an underground operation. Is that correct?
That's correct. When we were running pit shells, we were running it at a cutoff grade at roughly 0.35% copper equivalent. And that there is a lot of lower grade material that is above that benchmark within the first 200 meters vertical that would compare with the Selba mine operations. So it's certainly, we've met with some of the majors that have reviewed the opportunity, that see, okay, the open pit makes a lot of sense. We want to see updates on that. And we've met with individuals that say this is a clear underground operation. The high grade is the value here. So I think it's important that we're going to continue to investigate both paths, because we look at the Selba mine, and that was a successful combination of those two factors. But I think in this marketplace is focused around grade. That's the opportunities that are pushing through. So we're going to keep that in our focus as we drill this off this year.
Excellent. And so based upon getting the rest of these phase 2 results out, you can start to model and figure out phase 3 that you'd be drilling here this year. Do you have any sort of publicly sort of stated, what sort of size of your 2025 sort of phase 3 program are you looking at?
So we're funded for roughly 20,000 meters of drilling. Now that drill budget will likely be broken down, and it may come out closer to throwing out a number, 17,000 meters of drilling, with the balance of the drill budget being allocated to downhole geophysics, follow-up surface geophysics, modeling, and other techniques around targeting. So we're still in process of developing that breakdown, also breaking down the meters, which I think is preliminary, will be focused around immediate resource growth within the model, mid-level, broadening these narrow veinlets, and following up on high-grade trends. I think you're going to see a theme of us taking more aggressive step outs. We've 2024 was an important year for us to develop the geological model, moving from what was more of a pure VMS that the government viewed this as to more of a hybrid model. So we're more confident in the overall model and setting that we're now going to be able to take more aggressive step outs. And I think that's what the market is really looking for, is what is the ultimate size and scale of what this opportunity could be. So I think that's the second bucket. The third bucket is property wide. This is a 1.6 kilometer trend of what is an 8.3 kilometer contact. So we've mentioned that preliminary results from the gravity survey were quite positive. We're going to bring out those targets in the coming short term, and that will outline property-wide drill targets that we're able to add some blue sky potential, and can we find another VMS lens uptrend or between this historical Selba mine and B26.
Excellent. And maybe we could talk a little sort of, macro talk. Complex world that we live in. Lots going on. New U.S. administration. We won't mention their name. We won't get any views on our video. But major shift. Then we've got, a bunch of stuff going on in the Canadian sort of market. We got global, things going on. It looks like there's a bit of a resource sort of commodity sort of a war kind of going on where these things are being viewed more preciously. So, what are your thoughts in terms of base metal and some of this, copper?
Yeah, I think it's quite the dynamics that we're balancing. You look at like the Canadian tariffs that have come out of nowhere, that's really hit our dollar hard, and I think is rotating a bit of capital over to the US because people are worried about how much softness we could have in the dollar, and how that impacts our markets. But like stepping back to copper generally, I think like the supply demand imbalances are clear. I think it's also a matter of where copper supply or opportunities are coming from. 50% of copper supply is from countries of political instability. And I think we're starting to see more and more investment coming back to places like Quebec, where you have government support, you have First Nation support, and you have clear permitting guidelines that is in support of development. So I think in terms of the setting, whether it's the gold tailwinds that we're seeing push $2,800 gold or within the range of that, I think those are here to stay. We've started back into an interest rate cutting environment amongst what is still a real inflation level that is well above target. These tariffs are inflationary. This is only going, I think, to put more fuel in the medium term around the value of gold and also the overall copper value, which copper inputs are inflationary, but also general debasement and the different factors that we are seeing are also good for copper. So I think we're in a good market. That's why as a family and our portfolio as a whole, we want more exposure to copper gold, and also the producers that are still trading at cash flow levels that are very undervalued. But we're starting to see more M&A. We're starting to see more M&A in the base metal space by predominantly gold producers, which is a good sign. We're starting to see them focused in jurisdictions like Canada. We've seen Agnico take over, invest in 4N, take over O3 mining within Quebec recently. So I think that's a good sign. And I think it's also a sign that there's a disconnect between the value of these juniors and what the replacement value is between the majors trying to produce these themselves. So I think it's a good sign for the sector. But again, I think there's investors on the sidelines with the amount of volatility, but also overall the underperformance within the mining sector in light of these factors.
Yeah, I guess it's been sort of a stock pickers sort of market. You've had we have a bit of a bull market kind of going on with the prices of metals and the underlying commodities. Thank goodness they are priced in US dollars. And so as long as you keep printing more of those and keep running deficits, likely we will see those underlying commodities continue to get more expensive just through the sheer, sort of monetary sort of supply and debasement you mentioned. So that seems to be kind of intact. What's not really intact is we haven't had an all ship sort of rise sort of market. And I think, that is a little bit sort of like concerning, but we really got to focus on the individual opportunities. So last time you're on the program, in July, your shares were trading in this, I think it was around 32 cents. You subsequently, you mentioned on our last video that you thought it was a pretty good time. Well, you were right. You get a check mark there because your shares a couple of months later shot up to just under 50 cents. There in the fall when we were having a pretty good time of it, and then it seemed like the music kind of stopped as we got into November, and then we got into some seasonality with December where everybody's focused on other things, holidays and time with family, and definitely not buying stocks. But for us smart guys that are stock buyers, we've seen a pretty good sort of resurgence in January here. And however, your company hasn't yet sort of participated too much in that. You're now trading, you're about, I guess, high 40s, almost 50% off of your October sort of highs. You're trading just over 25 cents, if I'm not mistaken. What sort of near-term catalyst do you have here that might, again, nothing, you don't control anything, but if the market sort of cooperates and sees value, what are some of the short-term catalysts that you have that might be able to affect that?
Yeah, I think the market has been frustrated by some of the delays out of phase two. And at the end of the day, I don't blame the market. I think it's something as an investor, as soon as you see delays in this tough market, you think the worst case scenario. So I think that's something that we have identified that as a weakness of the fourth quarter. And we're putting people in place that we don't have that happen again. So we'll have results out this week. We will be fully caught up by February. And we're going to set the stage for what is a strong 2025 and a clear growth plan. So I think these delays, I think some of the frustration has been more of a temporary operational item versus an asset item. So it's something that we've taken advantage. We've been able to add to our position, but we have to continue to do a better job going forward. This is a competitive market. It's a tough market, but at the end of the day, this asset has a lot of value. So although it has been a frustrating little period of time, we're confident that the value will press through. And that's why but again, we're in a great position. We raised capital at the right time. We've managed our capital well, and we're now still fully financed for this year, which we are going to drill between likely 17 and 20,000 meters without the need of any more capital. So although it has been a frustrating time, we have all the pieces to get through. And I think in hindsight, this is going to be looked at as quite a large opportunity where the market got frustrated and there's been a clear disconnect between what we've been able to do last year and the value that is there today. And within phase three, we're a drill hole away from the market really waking up to this, because this asset has the potential to deliver world-class results, just like we did in the first half of this year. So I think stepping back to build a quality assessment around the growth combined with our phase 3 drill plans, I think will make a big difference with turning around and regaining momentum like we did earlier in the year.
Well, that's a great answer. Very humble and honest of you. Really appreciate that. I look forward to seeing some of these new hires sort of come aboard to help make sure that you sort of, under promise and over deliver on some of the stuff that's out of your control. So maybe turn your attention to the financial health. That's, obviously in this market, when it's a bit of a stock picker's universe, the last, I can't tell you how I've been, flipping my desk and throwing chairs, breaking chairs in my office here recently, because you know what? We're in a financing window, right? January, everybody comes out and they want to do financings. And so a bunch of stocks in my portfolio that I thought were primed to sort of move, have sort of, they've been kneecapped a bit because they've gone out and announced fairly dilutive sort of large financings to sort of de-risk and get ahead of any trouble with tariffs and other sort of geopolitical things that are sort of going on. But, those companies that are well cashed up that probably won't go back to the market and dilute, they tend to have been moving pretty well. Maybe we could speak to your sort of financial health. Do you got any cheap financing you're going to drop on our heads anytime soon?
No, I think we lead by example. We've been buying in the open market because we see a lot of value at these levels. And between myself and different family members, I'm sure you're going to see it continue. So the thing is we, as I mentioned, we raised capital at the right time last year and we were criticized. I think we were criticized at the time. Do you need this amount of capital? And in hindsight, it was a great move. We made sure that we fully financed our obligations with the Quebec government so that we weren't at the mercy of the market, because we're confident that this asset, we are going to get recognized in the market. The exact timing is out of my control, but it's too strong of an opportunity, and it's about keeping moving, progressing on programs, and being ahead of our capital requirements. So I think we're in a good position to weather this short-term storm that I believe we're in. Also, the short-term volatility that we're seeing in the markets, especially in the Canadian junior market. So we're certainly comfortable for the foreseeable future, and we're going to get as much out of our capital as we can. We're going to start 2026 with roughly $3 million. So there's no panic. We're confident in the disconnect, and we're gonna continue to bring out results and really show a clearer path for 2025.
So any further idea on another updated MRE? How many more sort of, how many more meters of drilling do you think you'd sort of need to do before you would sort of upgrade it again? Yes, you did a good job on that to get to where the tonnage and to see a fairly big increase over the historic. You did that fairly rapidly. Any sort of plans or ideas on when we might see another sort of updated? Would it be in a couple of years?
I think it's a moving target. I think we're going to monitor and track where the resource is on a program to program basis to determine when that makes sense. If we're successful in larger step outs within the next program and we will get rewarded on that, then it may push that time frame down the road, because it's going to take time to then drill out those new, whether they're extensions or new parallel zones, or like this is still where we're at with B26. We're still early on in determining what is the size and scale of what this opportunity could be. So to say that we're going to put out another resource at a certain time frame, again, it depends on what we're seeing in drilling. It depends on what we're seeing in the market. So it's going to be a moving target. To complete our option agreement with the Quebec government, we do have to deliver a PEA. So that's something of consideration. At some point in 2026, we're fully financed to complete those obligations. So no set timeframes as of now, but I think the key thing is we see a lot more growth before we're at any any sort of a cap on where the potential is here.
So normally, in this type of business, the ideal sort of scenario would be small junior gets cashed up, takes a project that a few other people have kind of worked on, you know, make a new discovery or expand it into something that looks economic, and then sort of a major or someone that's better sort of capitalized is able to kind of come in, acquire it, and ultimately reward those sort of earlier shareholders. They don't have to get into the development side. It seems like a lot of junior or smaller companies in this capital constrained market are now sort of coming up with their own sort of near term cash flow sort of scenarios. Are you guys still sort of what's your sort of plan? Are you guys ever considering to put this in production yourself, or are you going to threaten to do so to hopefully sweeten a deal with an acquirer? Or are you building this to be acquired? What sort of business plan are you guys looking at for this over the next couple of years?
Our plan is to build this to be acquired, but I think you always have to have the contacts and expertise to take it to the next level if required. But I do believe that there's enough interested parties. If we hit our milestones within exploration, within our resource goals, given the strong infrastructure that we do have, the proximity to towns with power, this, we believe, will be a lower CapEx opportunity compared to a lot of the competing projects out there. So we do think that this has the combination, but we're also betting on the market. We're betting on this market to be a $5-6 plus per pound copper market. We think that the value case for that is there. We think that the value case for gold being well above $3,000 per ounce is there. So we're also betting on that. And I think within that market, like even today, the majors are producing record cash flows. They've depleted their reserves and resources, and there's a huge need to replenish and find new opportunities. And we've been able to see that with conversations so far at B26. So I do think that B26 is something that's highly sought out in the market. I think we've done well in 2024. We need to take what we've learned in 2024 and really build out a clear growth plan to the market, that we are able to show the model, we're able to provide credibility to this larger scale tonnage potential of B26. And I think within that setting, drilling against that plan, we're able to get more value and get a strategic investor over the line at the right time. So I do think that this is something that has that right equation, that we could see a takeover if we are successful in where we think this project will go.
Excellent. Well, thanks so much for answering that. Just the sort of broader health of the market, I'm going to ask you a question you're probably going to hate, but do you think crypto is affecting junior mining? How do we get younger investors into this space?
I think crypto is affecting the market. I think I think there's a few things. You look at the Australian market, the junior mining market there is still quite healthy, but you have a lot of support from the pension funds, the superannuation requirements that have a lot of people betting on junior mining. The Australian market was not burnt by the small cap crypto trade, was not burnt by the small cap cannabis trade. So I think the Canadian markets, you had a concentration of a very small pool of people that did very well within those markets, while you had the overall retail market do very poorly. And I think we're still suffering at the consequences of those markets. So I think certainly the crypto speculative money, a portion of that has been taken away from junior mining that's done extremely well in crypto over the last year or so. But I think it's also that we've had a lot of capital that has been crushed by lifestyle companies and pump and dumps that I think are too frequent within the Canadian markets. I think that's also a big concern that is deterring people from investing in this market. So I think We need to have people that are more focused within investing in real companies. And also we need more junior mining companies to produce returns for people. That is what's going to attract more capital as well. It has been a tough sector, but we are seeing examples of great returns on capital. And as we see more and more of that, we're going to pull in more capital into the space. And in history, the Australian market has been a leading indicator of where investment can go. And we see arbitrage opportunities where ASX listed companies are absorbing Canadian companies because the value difference is there. So it's a combination of those factors. But I do think that there's enough of a metals trade and demand coming that we should be able to push through this, and we will have a market that's very exciting.
Years and years and years ago, when I first started getting really interested in junior mining, the Australian Stock Exchange, the ASX, came over here and wanted a bunch of companies to sort of look at duly listing their shares also on the Australian. I've seen a little bit of that again. Is that at all sort of like a possibility? Do you see more of that stuff happening if their market sees more real money sort of participation? Again, without bringing Abitibi to the forefront, just in general, what do you think of that statement?
I think it's something that we're considering. You look at the valuations of like Firefly, which is a polymetallic historical mine. The valuation that they've received in the marketplace has been incredible. So I think, and we've had interest from ASX companies that see the valuation of B26 and say, like, you'd be much higher valued within the ASX markets. And it's something that we're certainly considering, but we have to consider it at a higher market cap. There's certain requirements to have our own listing versus RTOing into a shell company that I don't think would be at the benefit of our shareholders, that would be overly dilutive. So it's something that we're looking at, because you look at, I was talking with a contact today, Patriot Battery Metals had $50 million of retail investment into the company. That's a whole completely different tape of what we have in the Canadian market. So certainly something that we're considering, but it has to be done at the right time, and we're not going to do it at all costs.
Sure. Well, that's certainly very interesting. Look, John, I really appreciate the opportunity to chat with you. Maybe just in closing, what are some thoughts you would like investors to sort of take away from our conversation today? Maybe you could kind of reiterate summarize a few points for us.
Yeah, no, I appreciate you having me on again. I think we're at an exciting time, and I think, as I mentioned, we're at a time that the value of what we've created last year is not being recognized in the market. As a result, we've been adding to our positions and leading by example, led by the chairman of the company, Keir DeLuce. And really, we have had some delays that I think people have looked to, but we have a plan to rectify that. We're in a great position for a big turnaround in 2025, being well financed. We're going to have lots of drilling. We're going to add some key team members that are going to be well aligned, that see the potential of B26. So I think we're going to have all these factors come together. Hopefully we'll have the volatility with some of these economic announcements calm down in the short term. But at the end of the day, if the value of assets and opportunities will push through short-term volatility, and we're confident that it would do that. So I appreciate your time, your listeners' times. There's thousands of juniors out there, and I think we appreciate your consideration. And at the end of the day, we're well aligned with our own capital, and we'll continue to make decisions with the best interests of our shareholders in mind.
Well, last time you were on, there was about a 50 or 60% gain short term after you were sort of on the show with the overall market conditions kind of improving. You're back in around a 25-cent share, I guess, about a 30 million market cap, a 20 million EV, as you kind of mentioned earlier. with a resource, with a project that looks like it could be expanded, and maybe more than one take on how you might economically model it. So we'll be interested to see how that stuff goes. But again, if we're looking for a quality name that's got high insider ownership, high strategic investors, with somebody who doesn't like to brag, but a very accomplished sort of executive with some good connections, and you're honest and aligned, then I don't see a lot of other value in the market compared to you guys if you're looking for this sort of thing. So thanks for coming on. You're, just so you know, you're in our 24 TokStocks sort of portfolio for 2025. We've only got 12 mining and exploration stocks this year. We brought it down from sort of a 60-40 split to a 50-50 and really tried to high grade and make sure we got rid of some of the redundant opportunities. So so I look forward to kind of catching up with you in the next quarter. We'll talk to you after you get back from PDAC, and we'll see what the rest of the draw results look like, and maybe what some of the phase 3 plans sort of look like. So look forward to catching up with you again, and really thank you for your time. Thanks, John.
Likewise. Thanks very much.